Okay. Now, can you guys see my screen?
Yeah.
Can you see my screen?
Yes.
Yes. Okay.
Yes.
Okay. Good. Now, this is DXY dollar index. Now, before we go into this straight to the technical, let's go briefly go through what happened last Friday. Last Friday, we have this non-farm payroll, and the result was beat the expectations, and which basically indicate how it's correct. Basically, give the Fed chairman Jerome Powell have some reason to talk about these uh, what's the words I want to use? Oh my god, tapering, right? We are going to see if you follow the news, you're going to see a lot of analysis start talking about tapering, right? From now on until end of the month, where you have this Jackson Hole meeting by this Fed, right? And in the Jackson Hole meeting, it is expected that the Fed chairman will talk about tapering. Now, what does it mean? Is tapering? It's basically to reduce the QE, reduce the QE. Now, after tapering, then we'll see the Fed start to increase interest rate. But until tapering is done, there's no way Fed can increase interest rate, right? So that is actually reducing the money supply to the market. Now, if we see the Fed start to reduce the money supply to the market, it means that the next follow-up action is to actually what it meant is actually they think that the economy is show signs of recovery, and they should start to ease off the measure, right? And that is actually means that we can expect Federal Reserve to bring forward the interest rate adjustment much earlier than 2023, which was original promised by Fed, right? It could be as early as 2022. Okay, so now of course we are now still in the 2021. Then you might wondering if the interest rate is going to increase in 2022. Why bother, right? But the thing is, financial market is a forward trading mechanism, right? We do not wait until it happened. Already trader or investor already factor in or already price in, right? Already price in the rate increase. So if the rate increase, when of course what we're going to see is a dollar index is going to rally, right? Now, before last Friday, if you remember, I made analysis on the DXY. I say that DXY is likely to find the bottom over here, and we're going to see the DXY start to move higher, right? And which it did already. Now, before we analyze the DXY, let's take a look at the dollar, this yield, right? The US 10-year yield. Now, if you remember, 10-year yield was dropping from 1.7, right? 1.7 back in April, all the way down to 1.2, almost like let's say 1.2, 1.13. Okay, 1.13. And we see last week it start to rally up, right? So basically because of the good report come out from non-farm payroll, and therefore we can see the yield start moving up, because they actually expect the interest rate to go up, right? But of course, we are talking about 2022. Okay, so this US 10-year yield confirmed that I think the end of the month Jackson Hole meeting is likely to talk about tapering. Now, if this really talk about tapering, because now we are all speculating, the market is speculating. Now, if we see the Fed start to do tapering, that is actually means that the next follow-up action is to increase interest rate, which means that the yield will go higher, which means that dollar will go higher, which means that measure will start to fall, which also means that the gold will start to fall. All right. So tonight, what I'm going to talk about a few currency, a few pair. The one is dollar index, followed by euro dollar, and of course the dollar yen, and lastly I will end with this gold, right? So this is what I will cover. Now, before that, let's go to the other currency. Let's go straight to this dollar index first. Now, in this DXY weekly time frame, we saw dollar index has been falling. It has been falling and falling, come from all the high of here all the way down, right? And once he reached this area, not surprisingly, this is where previously where the demand was, right? And this has not been visited before. So price has came back, right? And now this is the level is holding the dollar index. And we saw the price actually go sideways, right? The price goes sideways. They're going through a phase of accumulations again, okay? And now we go to the daily. We go to the daily. Now, in a daily time frame, we saw there is also accumulation over here, right? We have this break. Okay, it break, it pull back. This is a backup, right? Price pull back to the backup. Now price is rally up, right? So the next target where I think the dollar index is going is this one. This is the near-term target. Of course, followed by this target, right? 93.40. 93.40 is the next target. But of course, you would unlikely for price to continue go rally up, right? It might just go up and down before go higher. Okay, so let's break down into the smaller time frame. This is a daily time frame. If we go down to 4-hourly time frame, what do we see here? We see a bullish bias, right? You can see the price is making a higher high, higher low, higher high, higher low, right? The current price right now is let me get my tool. Tool is here. Second. Okay, this is a high. We also can see that this last lower high has been taken out. Okay, so we need to identify the range of this 4-hour range. Now, if you are trading on a 4-hour, then you identify the 4-hour range. If you are trading on the daily, you identify a daily range. If you are trading on the 1 hour, you identify your 1-hour range, right? So where is the source that removed this high? Well, the source is here, the origin basically, right? The origin. So now I expect the dollar index to move higher, but if based on this 4-hour range, if I'm trading on a 4-hour range, I can clearly see that the current price is very high, right? Based on this range, right? But I also can see a price has been rally up based on the 4-hour. We see there's a downtrend. Okay, then price go into accumulations, right? Price go down, and then this is the last push down to take out the stop loss, and then it break higher, it pull back, create this backup over here. Okay, and now price rally off. It left behind a lot of gaps that need to be filled. Okay, and it took out this high, the stop hunting, took out that high, the stop hunting. So now the price is hesitating, consolidating. So now I expect the price to continue to go higher, but the next target is this one, and followed by, of course, this one, right? But if I'm trading on a 4-hour time frame, I can see that potentially we might see the price start moving lower to fill this gap, right? To unlock this trap order. So I'm very interested to look for a price to go lower, at least 50% of this ERC. And once the price comes to this 50% ERC, I can see that my location right now at least is no longer high. This is low, that is high. So I prefer to see the price come down all the way to the base of the ERC, which is the demand, right? And this is the area that I would like to go long, okay? But of course, this is a DXY. We won't trade DXY, but knowing that if DXY move down to this area, if DXY start to move down from the current price to this level, which means that the EU is likely to move higher. And when DXY come to this area and start to move sideways, ranging, and then start to stop hunting and start to break out above the trading range, we know that the EU euro dollar is going down. So by looking at the DXY, we can actually, in a way, already analyzing what is likely to happen on the euro dollar, right? Also, if you analyze the DXY, you can also trade US dollar, SGD, right? SGD, US dollar, SGD. They move quite similar. This currency pair, they actually track quite closely on the DXY. Okay, that's why we always start with the DXY. So overall, I think that in the bias right now for DXY is long. I believe that it's going up, right? So now, if we go down to the 1 hour time frame, in 1 hour time frame, a 1 hour time frame is not much different from the 4 hour time frame, right? So there's not much to say. Now you can see that we start to see the price go into what? Go into distributions, right? So if we go even lower time frame, like 5 minutes time frame, what do you see in the 5 minutes time frame? Okay, you can see that this is the line on the sand. Okay, so now of course these are all the potential stop hunting, right? So if I will only look to sell the dollar index, which means to long the euro dollar, if I see a convincing break of DXY, right, and then it start to pull back, means that DXY is going down, then I'll start to look for, of course, look for EU, right? EU trade. Okay. So that using a smaller time, as small as 5 minutes time frame, we can predict accurately where DXY is likely to move to. Okay. So now once, okay, there's some message there. Oh, no message. Okay. Now, by the way, if you have any question, you can always type it in the chat box, right? Type into the chat box. Now, next, we go to the euro dollar, right? Euro dollar, we go start from the daily time frame. Now, last week we talked about this multiple low, right? I say that this is likely to be stop hunting. So it went lower, it grabbed the stop. No, I think that potentially we are likely to see the price come and visit this low. That's why my next target is 1.175, right? So yeah, so that's why I can see it. So if you go to the 4 hour time frame, you can see 4 hour time frame, the stop hunting is very clear. What in the daily time frame is not clear, but 4 hour time frame, you can see that it's so clear. Market just go down and immediately pull back, right? So now, of course, right now, with the probability that the Fed will talk about tapering soon in the end of the month, we can see that the market sentiment right now have shifted, all right, towards a bullish dollar and also a bearish euro dollar. Okay, so now I will expect the price. I want to sell the euro dollar, but not at the current level. I like to sell higher. My target will be, example over here, 1.700, right? So you can see right here, you can see the current price is here. If I okay, if I may just mute everybody, give me a second. I just mute everyone.
Then the opposite is a double lah.
Okay, so I mute everyone. All right. So if you need to ask question, you just type it out. Otherwise, there's some background noise. Yeah. Okay. So the current price of the euro dollar low is, which is here, right? We mark that low, but this is a 4 hour time frame. Yeah? Now, we also can see that there are gaps, right? There's a gap. There are 3 gaps that need to be filled, right? And we see the price have dropped and it take out this low, okay? And we need to find where is the origin that break this low. The origin that break this low, I will take this one, right? This is, I don't take this one because this one don't really clear, right? It's like going sideways. I would rather take this one. So that is the origin that took out that low. Took out which low? Took out this low. It took out this low. It took out this low. Okay. They also took out that low, right? So this is the origin that took out this low. So now if I want to look to sell, where is the logical place for me to sell? Of course, I'll be looking for at least as high as possible, right? So if I pull my fib, I will start to look to sell if the price can get above into the green zone there, right? Which start up very nicely to this gap. Okay, very nicely to the gap. But then again, like as I say, this is provided you are trading off the 4-hourly time frame. Now, what if you are not trading off the 4-hourly time frame? Then your analysis will be different, right? So we go, if you are trading off 1-hour time frame, now we go to 1-hour time frame. So what do we see? We see a bearish move, right? And then we see the price has took out all these highs, the same, almost the same as a 4-hourly time frame. Now you can see this is the one I'm very interested. You can see that this is a trap order. Price push higher, take out the stop loss, and then it price drop, right? So clearly this is a trap order that the bank would need to move higher, at least to where it start off the buy, right? The long start from here, at least here, okay? So I believe the price will need to come all the way up here to unlock this trap order, which means that this is the level I'll be looking to sell. This level. Withdraw. Okay. It is a level I'm looking to sell in a 1-hour time frame. Okay. But for the time being, of course, we can look for some opportunity to long if we have a good risk reward, which I think that the risk reward is very, very good, right? But we have to make sure that the sentiment about this bullish dollar has subsided, right, before we start to go long. Now, one way we can know when to get in to go for long euro dollar, look for opportunity long somewhere at this area, okay, around this area, and take your profit around this area before you start to sell after you take profit, right? So we want to go long, take profit here, and then go sell, take profit here, right? We want to trade both ways. Now, how can we know that it is safe for us to go long? One way we can know is by looking at the DXY, right? DXY. Just how I show you the DXY, I go down all the way to the 5 minutes time frame, right? Now, what do we want to see in the 5 minutes time frame? I want to see the distribution in the 5 minutes have a convincing break, right? Just how I show you, right? The break is not convincing. We see a few attempt to break, but it pull back. Attempt to break, it pull back. Attempt to break, it pull back. That is not break. The break, a convincing break should be a very clearly that it shouldn't have, it should be a break. Then we see price start to go back up. That is the break, right? So when we see this happen in a lower time frame in the DXY, it means that DXY is going down. So it means that euro dollar is going up. And that's where I will start to look for a long in euro dollar. Otherwise, I will just hesitate. I will really I won't go long on the euro dollar because the sentiment about is bearish right now on the euro dollar. I prefer to sell rather than long. But in the event that I see DXY start to go lower, then I can take some short-term opportunity to go long on the euro dollar. Is that the kind of counter trend trade? Okay, so where do I expect the price to go up? Well, at least this area. Okay, then I take my profit. So you can see that if I take my trade somewhere around this area, my stop loss is below this swing low. You can see that the risk reward is very good, right? If we take a look at the risk reward, long, say if we manage to get somewhere around here, and our stop loss is say below here, and our take profit is all the way up here, you can see that the risk reward is at least 1:3, right? So that is the trade that I would definitely take, provided I see what I need to see on the DXY. All right. So how can we tell whether this is time to buy? The same thing. We see right now the DXY euro dollar is on the ranging, right? In other words, in accumulation. We can even go down to the lower time frame, like 5 minutes time frame, and see what the DXY is doing. You can see that this one, it looks like a mirror image to the DXY, right? Euro dollar, so basically we can expect euro dollar to break above this high. Okay, if we see the euro dollar convincingly break above this high, okay, and then it start to go on the sideways, we can look for opportunity to go long. right? And then expect price to go higher, provided DXY is also do opposite, which likely you'll be the same. It will be inverse relationship, right? So I think that this is what I can see on the DXY in the short term, right? In the short term, you can see, look at this. My goodness, so clear, right? You see this trap order, the bank has to go up there to unlock it, right? Before it go lower. So I'm quite if I see that opportunity arise to go long, I will go long. All right, I'm very happy to go long in here. So now, then that is for short term. Now, in the longer term, I think that I'm still think that euro dollar is likely to go lower, right? Go lower to look the target. Okay, look for the daily time frame. This is a low. I think the target, that is a target. Okay, this is a target. So looking to sell here, take profit here. Looking for long first, then looking for sell, take profit here. Okay, any question on the euro dollar? Anyone, any question? But as we can see that technically, we're still in the uptrend, technically, right? You can see that we are in this. Now we are still in consolidate. Can you see? Right? We are still consolidate. Okay, let me use a different color to show you so you can see clearly. In a higher time frame, we are in this uptrend. Okay. Now the price is actually consolidate in the lower time frame. Right? So you can see that the red line, which is a higher time frame trend, it is still in an uptrend because we can see that this last higher low has not been taken out yet. Right? Therefore, in the bigger time frame like this, it is still an uptrend, right? This euro can go up and down in a lower time frame. Lower time frame, it can be a downtrend, but in the bigger time frame, it is still an uptrend. Okay. So if you trade the kind of bigger time frame, you can still look for long because it is still a bullish uptrend. But if you go down all the way to trade this area, just this area, from here to here, that means that you are trading in a bearish trend. You are trading here. If you are trading this, right? It can be like this. You are trading this. If you are trading only this time frame, it is bearish. We can look to sell. But if you are trading this red line time frame, the higher time frame, you are bullish. If you wait for price to go lower, right, to challenge this low, next target low, then we can see look for price go higher. Okay. So as I mentioned many times, it all depends on what time frame you are trading, right? If you are trading in a smaller time frame, you are selling, but you're trading on the bigger time frame, you are buying. Ronald say what? Newbie here. This is the first time I heard DXY. So it means before trading the major pair, it must consider first. Well, we say that this kind of analysis is called intermarket analysis. We want to trade the major. We want to trade the euro dollar. We want to trade the pound dollar, right? And other major pair, right? But we know that all the euro dollar, euro and the pound and Australian dollar, Canadian dollar, yen, etc., they are all paired up with the US dollar, right? And so far we have an index, which is DXY, to tell us what is DXY doing. So trading is all about probability. We just want to get another angle, right? To get some kind of confirmation to trade the EU or GU, right? Because sometimes it might not appear as clear as when you look at the EU euro dollar, but when you look at the dollar index, it can be quite clear, right? Because no doubt we say that they are all they are inverse relationship. One move up, the other one move down. But it is no harm to take a look at the dollar DXY when you want to trade other major. Okay. Any other question, guys? Okay, okay. Now next one I want to talk about is the dollar yen. Now with the this is what I post in the trading room, right? With the with this tapering right now is in discussions, right? And it means that inflation is going to bring for inflation is not inflation. I mean, the interest rate is going to bring forward, right, from 2.3 to 2.2, likely, very likely. So it means that dollar is going to benefit from this because yield is going higher, and we already saw the yield start to move higher. All right, already start to move higher, and it means that we can look for opportunity to long US dollar against low yielding currency. Right, euro dollar is a one currency that is low yielding because they are negative interest rate. Now yen is another currency which is the low yielding. Swiss franc is another currency which is negative interest rate, right? So we can start looking for opportunity to long US dollar against those currency that has a low yielding, low interest rate. Okay, and dollar yen is what another pair that we can look at to go for long. Okay, so now based on the higher time frame, you can see that this I use the dot, the red ball to indicate it is still in an uptrend. You can see that this is the high, right? That higher than this high. This is a higher high than this high. This is the lower high, and price has not made another higher low yet, right? So over here we are in the uptrend in a smaller time frame. Over here we are in a downtrend in a smaller time frame, and over here we are in an uptrend in an even smaller time frame, right? You can dissect into different time frame and trade, but in a higher time frame like this, it is still in an uptrend. Now with this better than expectation on the non-farm payroll reports, right? We expect the tapering going to put on table to discuss by end of the month. So it means that yield is going higher, dollar is going higher. So we are looking to go long on the dollar yen, right? So if we go down to dollar yen, we go to the 1 hour time frame. Because so far I compare both the DXY and the euro dollar on the 4 hourly and 1 hour. They almost look similar, right? So we can just skip the 4 hour and go straight to the 1 hour time frame to analyze. Now, this is what I like I say, this is what I noted to the trading room this morning, right? If we take a look at this, you can see that this in a higher time frame. Just now I mentioned the daily. Right, we take a look. I use the red ball to indicate we can see that it is in an uptrend. Here in an uptrend, but if we look only this amount of data point, right, which I use a black line to draw, we are actually in a downtrend, right? So once again, I want to emphasize this again. It depends on what time frame you are looking at, right? Now, if you trade based on the higher time frame like daily, it is uptrend. If you trade on this black line in the lower time frame, like maybe let's go down to 1 hour, right? I'll go down to 4 hourly. It's maybe clearer. Yes, in the 4 hourly, it is clearly in a downtrend, right? This is downtrend, the black line. But if we go down even lower time frame, like 1 hour time frame, well, it is uptrend. You can see that. How can I know it is uptrend? Well, simple, because the price make a low. We see the price make a low, a high, a low, a high, a low, a high, a potential low again, right? So clearly in this 1 hour time frame, it is uptrend. So can I trade based on this 1 hour, this amount of data point? Yes, of course I can, right? Because I will be more like an intraday, okay? So now let's make this lighter so it will not distract us. So now if I take a look at the 1 hour time frame, I can see that it is uptrend. And this 1 hour time frame uptrend actually in line with the higher time frame daily. You can see that daily higher time frame bullish. Okay. 4 hourly bearish, 1 hour bullish, same as the daily time frame. So now if I'm going to trade on the 1 hour time frame, I can see that this morning this line was still there, the 1 hour range, right? And the price actually took out this lower high, right? It took out this lower high. It took out this lower high. It took out this. This is barely took out, but still take out, right? So basically, you can see the price has took out all these lower high, all right, and make a high here. Okay, so we need to find out where is the origin that remove all this high, the origin, right? The origin is important because the origin or the source that remove this high, right, is the level where price tend to come back in the future to test. Okay, now the origin could be this one, right? It can be this one, right? But now let me draw. It can be this one, right? And it can be this one. Okay, so you can't, there are two we can choose, right? This will be the base of this entire ERC, right? This is also at the origin, right? The real origin, of course, we have a few origin. The real origin is this one. This is the lowest ERC, which is this one, right? So we have three, right? We have three source. Let me corner it. We have three. One is here, one is here, and one is this one. Okay, 1, 2, 3. So we can always take the first one, right? First one and think that we are trading this range. But when the price comes to this level and we don't see what we need to see, then we should expect the price going to the second origin, and we should look for a trade here. And eventually, if the price come all the way here, we should look for long again because this is the real origin. This is the real one. Why I say this is the real origin? Because if we take a look at this whole entire move from here to here, right? This is the lowest point, right? So this is the real origin. The most powerful one. If the price is going to reject, it's likely to reject this one. This is less weight, right? Now, of course, why, if this is less weight, why we still want to take? Well, because we are trader, right? We want to take, because sometimes the price come here, it may just bounce off, and then you keep waiting for price to come here and it never come, right? But if you are the kind of trader, say, well, I only want to take the highest odd, then you wait for price to come here, then you look for a long, right? But the thing is, if you sit out without trade for too many times, you tend to start taking all these trade, right? So these are all the trade that you can potentially take 1, 2, 3. Okay, and we have no idea at which level price is going to react. We need to, when the price comes to this level, we need to go down to a lower time frame and see what the price want to do, right? So the first level is this one we are looking at, right? And then followed by this. Now, if we take a look at this one first, right? So you can see that where is the current price right now? Okay, you can see that where is the current price right now. If we think based on this range, let's remove this for the time being, right? This is the range. Okay, the high is here, the low is here. Now, I know that I want to buy, I want to go long. Now, if I want to go long, obviously I want to buy as low as possible, right? If possible to be in this area. Okay, and I also see that there's a ERC, that this gap will need to be filled. Okay, so I'm very happy to wait for price to come all the way to this area and give me what I need to see, right? Before I jump into long. And first target will be this, followed by some more target right on top, right? So this is a very simple trade. Any questions? It might be an intraday. So what might happen is this, we have 3 potential level to go long. So this is another second level, right? So what might happen is, we might see the price come down, right? It did what it did, and price go up, okay? And then maybe next few days, price come down to test this one, and price goes up and come down to test this one, and this one is really take off. It can be, right? Because price will just zigzag around, right? It tests this one, it tests this one, and finally it tests this one. And then that is the one that actually push the price all the way up. Okay. I think I really like what I see on the dollar yen, right? These are two levels I watch. The best level will be the third level. Okay. Any questions? Yes, dollar index is always as an inverse relationship to the euro dollar. Always. How do I know the original two will not break? Yeah, you need to go down to a lower time frame, right? As the price come down lower to this zone, you need to go down to a lower time frame. Example, 5 minutes time frame. Okay. Let's say this is the area. So what do we want to see? Well, I want to see this. Example, when the price come down, I need to see this. Okay. Price make a low, a high, a low, higher low. I need to see the break of structure. Okay. And that's when the price start to pull back. This will be the area I'll be looking for long. Okay. If I don't see this, and the price arrived in this area, I don't see this, then it means the price is going for the next level. Okay. Anybody have any question on UJ? Anyone have any question on UJ? No? Okay, so now then we go to the last one, which is the gold, right? Gold. Now, for those of you who remember, I think months ago, when gold has made this high until here, okay, let me do something on this gold chart. For those of you who have been following my trade, if you remember, when the gold was this area, right? I say that gold is going to fill this gap. If you just get your, try to bring back your memory here. You fill this gap. Okay. After you fill the gap, we say that it's going to test this high. Okay. And after it tests the high, we're going to see the price start going down to take out all these stop loss, right? Going to where? It's going down all the way, right? It may just come down and go up and then go down. The idea is go all the way down to this area. Let me see. Okay. So back in that was in January, right? When the gold was testing this high, I said that gold is likely to test the high. After it tests the high, we can expect the price to come down to test, to come back again, test, and eventually price is going to come here. Okay. And then after price go there, we're going to see the gold really take off more than 2,000. Okay. This is, of course, in a bigger time frame, right? It will take months and months to play out this kind of movement. Okay. Now, why I think the price is likely to come down here, and we already saw. Now, if we fast forward now, you see what happened? The price already from this high, right, is already coming here. Can you see? It's already there. It's come to unlock this trap order. This is a trap order that needs to be unlocked. Okay. So price is almost there. Can you see that? If I put a horizontal line on this low that make last Friday, it's almost there. It's already at the doorstep. Can you see that? It's already knocking on the door. Okay. So this is so now what do you expect gold to do? Well, I think it will go down, right? It will go lower to fill this gap. Now, where's the gap? Well, the gap is here. Gold will come here, right? You will have to unlock this trap order, it fill the gap. Then we start to see gold move this way. Okay, and this time in exactly what we say, what we are talking about the tapering, right? If we see a tapering and which is likely to have the probability of discussing a tapering by end of the month in Jackson Hole has increased. Like even Goldman Sachs, right? I post in the Forex group in our Slack general chat group, right? Even Goldman Sachs have already increased their probability. They say that they are likely to talk about tapering, right? And if that's happened, we are going to see a stronger dollar. A stronger dollar will also mean the gold is going down because they are inverse relationship. Now, having said that, as we all know, right, for those of you who have gone through the workshop, gold is not just moved by dollar index alone. You also moved by interest rate. You also moved by inflation expectation, right? Now, so we talk about US dollar. Gold is going to move lower because of the higher US dollar. That is one consideration that will move US dollar, right? Stronger US dollar, gold will likely to move lower because of that inverse relationship. Now, the second market mover for gold is interest rate. Interest rate. Now, we say that when in the low interest rate environment, right, the investor will rather put their money in gold rather than currency because of the even they put their money in the currency, they are not making any not making any significant yield. So, but making the kind of low yield at the same time, you have to take excessive risk because your money is in the currency, right? The money put in the currency and compared to money put in the gold, obviously gold is a better a safer asset to put in rather than currency. So in the low interest rate environment, we say that gold will bullish. Gold will benefit from low interest rate environment. But now, since last Friday, the non-farm payroll report have announced, everything changed, right? Because if by end of the month, Fed really start to talk about tapering, cut back their bond purchase, we are going to see interest rate that's going to drive the interest rate higher. So when the interest rate start to go higher, smart money will start to move, or investor will start to move their money into the currency, right, or asset class that offer them a better yield than gold, right? Because we know that gold has zero yield, right? Therefore, when the investor can find a better yielding opportunity or investment, they will start to move the money out from gold and towards those asset class that offer a higher yield. So with the dollar index, with the dollar getting stronger, with the interest rates likely to break forward after tapering, we're going to see that money is going to flow out from gold. So these two factors, it point us to one thing: gold is going lower. Now, the third one is inflation. We say that gold is a very good hedge for inflation, right? When inflation time, right, people start to move their money into gold or move their money into property. These are all good hedge against inflation. Now, with the inflation is rising, of course, gold is also benefit, right? So now, if we take a look at these three drivers that drive the gold price, we can see that the first two is against gold. Only the last one is favor gold, because we also can experience in our daily life, price are rising, it's increasing, right? Inflation is rising. So this is a good thing, but we have two against one, right? Two against one. So I think that overall, the general direction for gold is moving lower. My bias for gold is moving lower until gold have tapped this level, the trap order, right? I believe that gold is going to go lower to unlock that trap order over there before it start moving higher. Now, what will move the gold higher? We do not know, but when it happens, we will know, right? But for the time being, I believe that we are going to see the gold start to go like this. Sometimes it might just go up to grab some liquidity before go down, right? You will not go in a straight line down. You will just zigzag manner, up and down, up and down. Sometimes just good hunting. But the general direction, I believe, is coming down to fill this gap and trap order before go higher. Now look at the price. The price is 1,006. Okay, so pay attention. This gold, right? We should look for sell, right? And only wait for price to. But again, when I say look to sell gold, it doesn't mean you cannot go when long gold, because what if you are trading in a lower time frame? What if you are trading in a 1 hour time frame? Let's say go to 1 hour time frame. Okay, what happens if you are trading on a 1 hour time frame? Okay, of course, right now we see that it is totally bearish. This drop, right? We can see that the drop has taken out this low. It took out this low. The current price, not the current price, the current low is actually here. So let's draw a line. Now, we need to find where is the origin that removed this low. The origin that removed this low. The origin is where? Well, here. This is the origin, right? So let's draw a line there. So where is the price right now? Go. Well, we are somewhere in the no man's land, somewhere in the middle between the high and the low, between this range. This is a 1 hour range, right? This is a 1 hour range. So where's the opportunity for gold? Well, we already see gold have filled this gap. Clearly, it has already filled this gap. Okay. Now, the next thing, this gap need to be filled. Okay, so I think that potentially gold might go up to this area. I'm not saying tonight, right? Let's see whether this week it will happen or not. Potentially gold might come to this area. Now, once the gold come to this area, I do not wait for price to fill the whole gap entirely. Once the price come to this area, I'll be looking for a short. Now, why are we looking for a short there? Because if we take a look at this high and this low, right? If I want to sell gold, I want to sell as high as possible. If I take this to measure the high to the low, where's the high? The high is at the green zone, at least 50% and above, right? So any area at this area, if I see the price start to move even higher to this area, I would like to start to see some opportunity to sell, right? Maybe the price will start to do something like this and another upthrust and price come back, break, sell. Okay, so this is what I want to see in a lower time frame, like 1 hour, right? Maybe I'll go down to the 10 minutes or even 15 minutes or even 5 minutes. Look for something, a distribution pattern or the reversal pattern I need to see. Okay, I need to see a very convincing break and then a pullback and a sell somewhere there. Okay, so the area I'm willing to participate to go to short for now, especially this gap. So now if we take a look at here, you can see that the price right now is doing what? It looks like it's doing, after they fill this gap, what the market is doing, it looks like it's digesting. Now in the lower time frame, this thing looks like what? It looks like distributing. Let's take a look in the 5 minutes time frame. So what do we see? Well, it is distributing. Can you see? We can see that price has been rally up to fill this gap. Right, this is a gap. And this is the preliminary support, buying climax. This is the automatic reactions. We have a upthrust. We have a Utah. Okay, this upthrust is to take out the stop loss above this buying climax. This this Utah here, another upthrust is to take out all the stop loss above all this. Okay, so now we are going through a phase of distributing. But the thing is it time for us to sell yet? Well, the question we need to ask ourselves is, have we seen the trading range remove? Well, this is the, right? This is the preliminary support low here. And this is the automatic reaction here. We need to see at least price has convincingly break this level. If we don't see that happen, right, then there's no trade for us to sell. Okay, we can expect gold to continue to push even higher. Okay, you can so distributing, you can just form a distribution, it can turn into accumulations. Right? So what I meant is, now this is a 5 minutes time frame. Okay, so if we go down to, you see what we can see is, we can see the price is that here. Now what my price might doing is like this. Accumulations. Distributing turn into accumulations, accumulation to push the price even higher to fill the next gap, higher gap. It can happen, right? So that's why for long as this is not taken out, there's no reason to short. So just how someone asked me, how can I know whether the price come to this level, it will hold or not? That's what we are looking for. This kind of activities we are looking for in a lower time frame, right? Because you can see that if we squeeze the chart a little bit, there's this gap that need to be filled. So what we might see is, if I go down to even lower time frame, just to want to see this area, just at this area. So we go down to 1 minute time frame. So what do we see in the 1 minute time frame? Well, I see the price in the bearish, right? We might go through a phase of, like I say, accumulations, and then break, pull back, then go up. And this go up, this go up here. Okay. All right. Any question on the gold? So it all depends. Can we go long? Just like I mentioned, can we go long in gold? Yes, we can. Now, if this happen, we see accumulation over here, we can go long and take profit here. Take profit at this high, right? And we can potentially go long somewhere here. And where is that? All disappeared. Okay, we potentially can go long here. Okay, and a target here. If you want to go long, go. Can, of course. Okay. Okay, question. Any question on the gold?
Sir Benny?
Yeah.
If this gold is in distribution, so if ever I want to go for short, I will wait for a candle to break the AR. Am I right? And something.
What time frame are you talking about first? Because I show so many time frames.
In 5 minutes. In 5 minutes. 5 minutes. 5 minute time frame. Yeah.
Okay. Yes.
5 minutes.
Yeah, 5 minutes. This is a 5 minutes.
Yeah. Yeah. Okay. If I think I want to go short, I will wait. I will wait for the price to break the AR, so that I can prove that the.
Now this when we say the break the AR, it has to be a convinced break, very convinced break. It means that price must really move lower, right? Move lower.
Okay.
Very convinced break.
Pullback.
And then price move back up. Okay, it is when the price start to move up, right? Then we can start to look for, now where can I sell?
Okay. So the pullback should be a very long candle also.
Huh? I don't follow you. I don't get you. Can you repeat again?
You okay? We already see the convincing break, right?
Okay, let's say we
Yeah.
see this convincing break. Yeah.
Yes. And we still have to wait for the pullback. So the
Yes,
pullback
yes.
should be a long candle also.
Who is that? Who is that?
Okay.
Who is that talking?
If Jonathan.
Jonathan,
Yes.
you need to refer to the manual. We never, we will always wait and the pullback, right?
Okay.
We don't chase after this. We always wait for pullback, because if you chase after this and sell after the drop, what if the price pullback? You get stopped out.
Yes.
Okay. Now, when we see the price pullback, now let's give throw a survey to the group here, right? Where is the level that you think that you want to go short? Please type in your answer. Where do you think is the best level to go for short? Let's say, assuming we have a convincing drop, and now we see a price pullback, and we are looking to sell, right? If we look to sell, okay, where is the level that you think that is a good level for us to sell? Okay, please type it in. Please participate.
Wait. I'm looking at the price.
Okay, we have 1748. Okay, let's see where's 1748. Okay, 1748 is here. So you're talking about double top. Okay, fair enough. What else? Anybody else? 1733. Okay, let's take a look at 1733. No, too low. Can it happen? Of course, it can happen. But if you're going to have a highest odd, you are selling on the previous support become resistant. Of course, you can, but that's not the highest odd. Where's the highest odd? Anybody else? 1740. Here. Well, you can, right? What else? Anybody else? Can you give a price point at the same time, give a reason why you think the price go there is the best level to short? Anyone? You don't have to give exactly the level. You can give a zone. Okay, Rick, say what? Origin, trap order. Yes. Now, where is the origin and trap order? Now, always remember, when the price move away, right, it has to go back to unlock the trap order. The origin, right? Origin, trap order, where is it? Okay, double top, 1748. Well, that's a double top. Okay, good. Where's the trap order? If you take a look at this, where's the trap order? This is a trap order.
The UTAD.
The Utah, exactly.
I have to hit the UTAD first. Yeah, I will. Let's.
So this entire zone, this entire zone is a level, is a zone that I'll be looking to short. But when the price, you can see right now the price is pulling back. Now, when the price is pulling back, we don't short. Why? Because it did not break this AR yet. It did not break the AR. We cannot short because this can potentially push even higher, right? So we say that the precondition for us to short gold is it has to break. It has to take out the AR. This low point here, over here, let me just draw this point. It has to take out this point with convinced break. Then the price start moving up. Then I will look for this area to short.
Okay.
Okay. Is that clear?
When the price reaches the UTAD, and that's the time for us to go short, right?
No.
Or still
when the
have
price
to
comes to this level, what do I have to do? I need to look for this.
Yeah. Okay.
So where's my trade? My zone is here. Yeah, because I need to see a change of behavior. And the price pull back one more time, right? And in this area, if I move this area, if you go down to a lower time frame, you will see there inside here, maybe they see some gap, right? And now you are trading between this high and this low. right? So you are trading this range. You ask yourself, I want to sell. Where should I sell? I want to sell as high as possible. So where should I sell? At least the green zone. Okay, everything is the same, right? We just from a bigger time frame, we move to the lower time frame. But what we do in the lower time frame is exactly the same as the higher time frame. No different. Everything is the same. All right.
Okay.
Any other questions? Now, for those of you who are not familiar with what we're talking about, trap order, unlock trap order, you really have to catch up with all the information. We have updated a lot of information for you. But if you don't go and read it up, you will not able to follow what we talk about, right? You need to go and read it up. All right. Now, okay, very good question. Where to take profit? Right. The first profit taking will be where this low happened. So if you sell somewhere up there, the first level to take your profit will be, let's say, example, the price has made a low to here. This will be the first profit. And then, of course, you can look for next profit here. So we are selling somewhere here. Your stop loss above. You can see that your risk reward is already very good for the first profit. And then if the price can come down all the way, oh, that is a home run. Okay. Any other question? Any more? No more? Okay, thank you very much. And we'll see you guys next week, like same time, live trading 8 to 9 o'clock. Bye.
Okay, sir. Thank you.
Bye.
Thank you.
Bye.
Bye, Benny.
Bye bye.
Bye, Benny.